But with this, on the bottom of your screen, we have the numbers coming in from FMCG major HUL, and this time it looks like a good set because there's been a beat on the profit. Rather, the profit has come in at 2,732 crores, beating the expectation, and that's a double-digit jump on a YOY basis as well. Along with that, the revenue has seen a surge of almost 4% on a YOY basis. 15,931 crores is what the company has reported. EBITDA seen a bit of a decline, a 1% decline on a YOY basis at 3,558 crores, while the margins have also seen a bit of a slump there from 23.5%. This time, the company has clocked in 22.3% margins. So that's about the HUL numbers. Those are the first prints coming in, but let's try to understand how are the numbers looking like versus the estimates. And we have Kaustav Pavaskar, lead analyst of ICICI Direct, joining us on the show. Kaustav, your first take on HUL numbers seems like a beat on the profit figure, while the margins that has seen a bit of a slump on a YY basis.
So at operating level, it is largely in line with what we were anticipating for the quarter. So revenue growth of 4%, largely in line with our expectation, and EBITDA margins came slightly lower than expectation. We were expecting around 22.7%. EBITDA margin around 22.3%. Yeah.
Kaustav, I think the bigger, question mark is on the margin guidance, which in the previous quarter, they reduced it to 22 to 23% from the earlier 23 to 24%. What's the, range that you're working with for margins for this quarter?
We were working at around 22.7% for this quarter, and overall for the year, we are expecting margins to be flat or marginally lower on year-on-year basis.
What are you anticipating in terms of both rural and urban scenario? What are you hoping to hear from Unilever this time?
So, as per the whatever results have come in the FMCG space, we have seen that the volume growth are sequentially improving, but there is the improvement is not significant. In fact, rural demand has quite been stable. Urban demand, there are so most of the companies have spoken about green shoots been visible. So I think if that continues, I think we should expect volume growth momentum to improve from in the quarters ahead. But we expect that large part of recovery should be visible in the second half of the year, considering the fact that inflation is lower and the benefits of what government incentive have been undertaken in terms of tax rebate and whatever the interest rate decline. I think those should start flowing in from the second half of the year.
But Kaustav, we have some more internals coming in from HUL, and specifically their segment-wise contribution. If we look at the home care revenue, that has come at 5,783 crores, a jump of 2%. Beauty and well-being revenue has seen a surge of almost 5% at 3,349 crores, while the personal care segment that has seen the most of the growth with 6.5% jump on the numbers. But Kaustav, versus our estimates, seems like the personal care revenue is a beat, while the home care revenue is slightly lower than the estimates. So Kaustav, do you believe that this miss on the home care revenue can weigh heavy on the stock, given the fact that it is indeed the largest contributor segment-wise?
I think it is on the expected line itself, because we were also anticipating around a personal care segment to grow by around 6%, home care to be around low single-digit kind of a growth. But I think we should expect things to revive in the quarters ahead, as I said. But depends on how what strategic initiatives management takes from here to revive the growth. I think going ahead, the more focus would be on the recovery on the volume growth than the margins, and that they have already spoken about. So I think we should expect things to revive in the quarters ahead.
Will Leave it at that. Thanks as always for your time. And let's just see what Unilever is up to. Pretty quiet actually in trade right now, reacting to its earnings. But let's try and understand what's happening with the rest of the market. That gap down definitely got a little bit covered into. Unilever has now also picked up tide by about almost 0.5%. But the overall markets, slight bit of recovery. We're down 150 odd points, better off than that 200 gap down that we started off the day with. Rishit, what's it looking like? Do you sense that we'll manage to cover lost ground and we'll made perhaps a near-term bottom today itself?
Yeah, hi, very good morning. No, we think that markets would show some correction in the short term, but that would be more of a time-wise correction rather than price-wise correction. In last month, 1 month, we have already seen some correction from the highs. When markets had made a high of around 25,600 from there, we have corrected towards 24,700, 24,600, which is the 100 DMS support. Now, I think in terms of corrections, the next move would be more of a consolidation phase where markets would try to take support around this 24,600, 550 range. And on the high side, 25,000 would continue to act as a resistance. Today also, we can see that there was a lot of uncertainty with regards to the news flows, regarding the tariff that we have got. But post that gap down opening, we are not seeing any kind of follow-up selling happening or such kind of panic situations coming in. So I think corrections, are of two types, price-wise as well as time-wise. So, this one, the price-wise correction has already been done in last 1 month. And now what we should see in next, maybe 1 or 2 weeks should be more of a consolidation phase for the markets.
That's about the market. But Ruchit, we just had the numbers coming in from HUL and seems like a beat on the profit and the stock is seeing a bit of a surge. Help us understand that how is the stock looking like on the technical front?
So firstly, if you compare HUL's movement along with the broader markets, what we have seen in the entire 3 months from April to June, the stock has not participated at all in the uptrend. So from a risk reward ratio perspective, I think the stock has already went through some good price as well as time-wise corrective phase. So downside seems to be very limited from here on for HUL. But it's not that high beta kind of name where we would expect any kind of significant uptrend in very short term, but a slow and gradual up move could be expected. So if one is looking from a positional perspective, then the risk reward ratio is definitely favorable to go long in HUL at current levels. 2400 to 2350 is a good support range. So one can keep a stop loss below 2350 on HUL and expect a gradual up move towards 2600.
Okay, just looking at the market texture right now, the losers, you've got Indus Tower.